Welcome to the Solemn Yu-Gi-Oh channel where we discuss everything collecting and investing in Yu-Gi-Oh! Fine, today we talk investing, or well, actually speculation again. Instead of, the cardboard, we are moving into GME, otherwise known as GameStop. So you've probably heard it on the news by now, or you've seen the YouTube videos, what's going on. But the quick TLDR, GameStop is a brick and mortar store that has been, doing very badly for quite a while. They were essentially stuck in the past in the sense that they're a retail store that didn't make the move to online quickly enough. By now they have, somewhat at least. And so major hedge funds shorted the company. What does this mean? Essentially you bet on that the company will do worse and go down over time. You borrow the shares, instantly sell them, and then you, at a later date, have to, buy them back at a later price and give them back. And so the difference between the price that you bought at and sold at, plus your shorting fee, I guess, is your profit. But without getting into those details, which most people have already explained 1,000 times, I wanted to dive deeper. So hedge funds shorted this company like crazy, up to the point where it was 130 or 140% of the floating shares. Basically they shorted more stock than existed. And so some people on Wall Street Bets, the Reddit of gamblers essentially, saw that and thought, that's interesting. So that means that at some point they need to buy those shares back to cover their position. They borrowed and sold, so then they need to buy it back to give it back to whoever they borrowed it from. But since they borrowed more shares than exist, that only works when it's truly going down. Again, I'm simplifying a lot here to get to that story quicker. And so Wall Street Bets went crazy on it. The stock exploded. And so now we are getting what's called a short squeeze, where those shorters will be forced essentially to buy back the shares at whatever price they can get to cover those positions. So no matter if this share is $5 or moon rocketing, they're gonna have to buy it back to cover their shit. Once again, simplifying a lot. Now, a lot of people are essentially saying, well, Friday is the day where all of this comes down. That's where they have to cover their positions. And so a lot of people are looking forward to the stock reaching its all-time high or whatever on Friday. Now, I am no financial advisor. This is entertainment purposes only. I'm not saying anything. Don't fucking gamble with your money here. This is entertainment purposes only. But so everyone's looking forward to Friday, and Wall Street Bets, they made meme magic work. The stock went from, $19 in January, but I know it was way lower, to what now? It's been going crazy, so, right now I think it's $3.40, but by the time this video goes up, who knows where it's at, right? Maybe it went down. That's also very possible. But so some people on Wall Street Bets, I know some guy who has been piling on tens of thousands for over a year now, is now up to the point where he's a multi-millionaire. Crazy shit like that. But again, for every story like that, there's hundreds of stories of people just getting fucked in these kinds of situations. Not necessarily hedge funds, but I mean betting on another company doing a similar thing. And so, on Wall Street Bets, you have this thing where people go, oh, I just lost $300,000, and everyone going, whoa, well done. So this culture is very different from someone who's an outsider. So don't just assume, whoa, I could have turned 10,000 into 14 million. I wish I could do the same. No, it's an outlier story, but it is wildly entertaining. Now, we get to today, where Wall Street Bets is essentially saying, well, this is our way to stick it to the man. And these hedge funds have been shorting this company, which has had negative impacts on this company because they shorted it so hard that, regardless of the fundamentals of the company, the stock price was artificially lowered to a certain extent. And, while the company wasn't doing too great, it also wasn't supposed to be $5, It still had these buildings and the brand and the inventory and so forth. So one smart dude just went well, this company is undervalued right now. A year ago, it's just being shorted so hard that, it's just piling on and going lower and lower and lower. And so people are saying, well, these hedge funds, these are the boogeymans, these are the big man, the ivory towers. And now, by us buying these shares, we are sticking it to them. We are saying, fuck you, man. Me, the little retail investor, little Jimmy, Timmy, Bobby, me, even as just a retail investor. People are saying, well, fuck it. I'll buy this share just so these assholes need to buy it at a very, very inflated price, and then we'll all just laugh, right? And that is true to an extent, and hedge funds have absolutely abused the shorting power and driven a lot of companies down this way, but there's also still more at play. And now again, I'm not on the side of the hedge funds or whatever. Absolutely not. It's so crazy to me how the mainstream media and people always forget about meme magic. Hear me out. Does anyone remember 2015, 2016 Trump? Now, I'm not saying Wall Street Bets is like Trump, and I'm not saying Wall Street Bets are Trump supporters or anything like that. I'm also not saying Trump is great and anything like this. I'm not saying any of that. But in 2015, when Trump announced he was running for president, it started off with a lot of, what a good joke. And you know, we all had a good time that way. That was funny when he announced it. And so a lot of people on 4chan and other message boards, you know, thought it was a good meme. And so a lot of memes were created. Grassroots organizations were made and they started doing memes. And you had videos like "Can't Stump the Trump" and "Own the Libs" and all of this. And you just had endless memes. You got to a point where people said the left can't meme and so forth. To a point where, sure, at some point it was a good meme. But after a while, it became backed by the mainstream. You know, people forget this. Like, people are saying, oh, Trump with all this power and this abuse and so forth. But like, a lot of the grassroots start of that whole election was a lot of online memery. A lot of people, when he got elected, called it meme magic. And again, I'm not saying that was a good thing or anything like that. This is not a political thing. It's just showing you that, you know, these narratives can really quickly change and people can really quickly forget where things started. Now, again, I'm not saying Trump was started by memes, but I will say a lot of the online grassroots support was a lot of memes. And so this time again, you know, the mainstream is like, how could this have happened? Oh, it's like, bitch, this happened 4 years ago. There's a lot of people online who are mad at the ivory towers, the big man, and just say, you know what? You know what would be fucking funny? And they just do shit. And one day they'll wake up and realize, damn, this has been happening over and over and over and over. However, what's really important to realize about this story though is that after a while it's no longer just meme magic. And after a while it's no longer just the little man profiting of this stuff. While the whole Trump movement may have started as this is a good meme, well, eventually he was president and he had political power and there were actual political parties, you know, making money of this or gaining power of this. Eventually actual proper institutions also gained from this. And so I feel like, sure, in this case, you know, there are some institutions who are gonna get fucked and, you know, people can be very happy about that. I don't really care. I don't even live in America. It's not really any of my deal, but it is very possible that there are quite some, you know, big institutions also profiting of this. You know, one thing that people are not realizing is how Robinhood, which is the app a lot of people on Wall Street Bets are using, actually works. You know, when Robinhood first came on the scene, it was a big victory for the little guy because it was like, well, for the longest time we had to go through brokers and there was a fee and we had to pay money just to play the game. But now the people have the power. Now I can just use my phone and just like that, I too can invest in stocks without any fees, without any middleman. Power to the people. However, when something is free, you gotta ask yourself, how is that company profitable? And the main way Robinhood is really profitable, as far as I'm aware, is because it's essentially a dark pool. You know, you may send in your order saying, you know, I see an Apple share, click, I buy an Apple share, and now I will soon own Apple. Stocks are instantaneous, right? Well, they're not entirely instantaneous. As far as I'm aware, Robinhood's business model is literally in that few milliseconds of you sending in your order, companies can pay them to then have insight into those orders. The common saying is, if the product is free, you are the product, or something like that. Robinhood does have to make money. And so this dark pool of orders, someone's still profiting of that. Sure, while the grassroots memes are funny, it is very possible that there's still, you know, quite some big money and big institutions profiting greatly of this whole GameStop thing. Now again, from a grassroots perspective and from a culture perspective, this is absolutely still David versus Goliath. It's still little guy versus big guy. It would be foolish to think, or naive to think, I want to say, that, you know, it's just the little man against the big guy. In my opinion, there's a couple big guys just, you know, standing at the sidelines. And, you know, Goliath and David, they're fighting over here. Wow. But like from the back, you know, David, do you need a better sword? Hey, David, do you want some poisoned arrows? Hey, David, here you go. And so, you know, I don't think it's purely David versus Goliath. Now, again, that doesn't necessarily matter. Currently, they also want to regulate this. That's also a funny thing that's been happening. You know, the meme magic is working and suddenly mainstream media goes like, this should be illegal. How dare they? This is market manipulation. And now, You could argue maybe some market manipulation is happening, but technically, if Wall Street Bets is shouting, we like this stock, we are not financial advisors, but we like this stock, I mean, good luck. These major hedge funds that have to be bailed out and are losing billions, of course they want regulation, of course, that's in their best interest right now. They want the trades to be stopped and they can cry all they want. I don't think they'll get away with it. Now, one thing that could be regulated to make sure that this doesn't happen or doesn't happen as largely anymore in the future is that maybe you could no longer be able to short stocks like at this scale. Because again, being able to short a company for more than the actual stock in circulation, that's a bit of an odd one, right? Like whenever people talk about, oh, how could 08 or 07 ever happen? How did the derivatives work this way? How was this ever legal? Again, these loopholes will always show up. And then after the fact, you think, what the fuck? How was this ever legal, right? And then they change something about it. So it's very possible that we will see shorting for more than the company's stock in existence. That's weird. How was that ever legal? And so it's very possible we might see some regulation there. But I will say I'm no expert on shorting. Like my understanding of shorting has been, guy who studied economics type of deal. I've never shorted a stock in my life, but I've been aware of how it works and its existence for quite a while now. Now, finally, what's also interesting is that since this whole thing went down, the markets have been down quite a bit. I think yesterday it lost like 2.6%, and today in Europe we're already down another 1.3%. Or something like that, because we have insight into the S&P because our market's open and there's people trading ETFs that represent the S&P and so forth. So like we already have a look into them, and then people ahead of us have a look into us and so forth. So not exactly, it's very possible that as their markets open, we will then recover if they recovered and so forth. But it's interesting how we likely have like a 3% drop in the market already. I'm not saying it's because of this news. It could just be random. Short term, stock markets are just gambling machines, and long term, they are weighing machines. That's another cool quote that people keep on throwing out. So it's very possible that this is just bad luck. Market's been doing great. Now there's a 3% drop in 2 days. Sure, whatever. But it's also possible that all of this created, fear and uncertainty. And I wonder, the last months people have said, oh, there's no way the market is this high when the economy is in shambles. So many people are out of their jobs. Others are saying, oh, but it's because of the low interest rates. Others are saying, oh, it's because of the stimulus checks. Oh, it's because of the printing go burr. There's all these arguments. And so I think if we're all being rational, it still doesn't make a lot of sense as to why a stock market would be doing so great when the economy would be doing so shit. Now I know the stock market is not the economy, very important. The stock market is more so how we feel about the future of the economy, in the sense that you are paying for the earnings of the future. So you assume soon maybe shit will open up and therefore the price is justified. But still, there's so much weirdness going on and people think this might be overpriced. And I wonder if a lot of people now lose their trust in the markets or whatever. You see big hedge funds maybe going down under, but we don't know that. You see some big guys losing money, some trust goes away, you suddenly have this dip. I wonder if that will have actual effects to a point where it's like the first domino being hit and then everything else starts hitting, and then we get like a proper recession, a proper collapse, or whatever you want to say, like an 08, like an 07. Now I'm not hoping for this, FYI. Like I'm properly exposed to the stock market, so it's not in my best interest that it crashes. However, if it does, I'll just pile in more and then make more money when it recovers. So it's not the biggest deal, but still, stock markets crashing aren't fun. Businesses go out of business even more than they already have. People are laid off. Stock market crashes suck, mostly for the people who don't have the biggest capital, because the guys with the big capital, in the recovery, they'll just make more because they have all this money to pile in. I'm not hoping for a crash whatsoever, but it would be interesting, from a educational perspective as to what's gonna happen. I don't know if this 3% drop was actually because of meme magic so far with the media going crazy over this and so forth, or if it's just, coincidence. I don't know. I really don't know. But I'm wondering if this will be like the first domino being hit. With that being said, I'm not telling you to sell out or anything like that. I'm not telling you to go crazy and so forth. I'm no financial advisor. I'm not selling out personally. I'm not a guy who tries to time the market. But hey, who knows? I just find this interesting, fascinating learning experience. If you are very into the whole Robinhood situation, like I'm aware of their business model, I'm aware of how they work, I've been following it for a while, but if you've been really deep into it, if oh, but I know about Citadel doing this and blah, 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 let me know more stuff in the comments down below. I'm always interested to learn. Like, subscribe, and I will see you soon. Ciao.